is now time for the Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the Trader's Edge. I'm your host, Steve Rhodes. And folks, thanks so much for joining me. I absolutely treasure your presence here today. And my outcome is to help you to become a better money master. But folks, mostly it is to provide you with the tools that will help you to lead an inspired life. Why? Because leading an inspired life, folks, that is what it's all about. That's where the rubber meets the road. So let's go take a look at one of those tools. This is the tool that I call the 4 ifs. Get out that pen and paper. You might want to take some notes because there are 4 ifs, folks, in the area of growth and change. And growth and change, that's what it's all about. It's happening all around us. You need to embrace it. And there's 4 ifs that make growth and change life worthwhile, as I like to say. That first if in life is that you want to make sure that you are always learning. Life is worthwhile, folks, if you learn. Learn from your personal experiences, learn from other people's experiences. I mean, take a look at what it is that we offer here at TFNN. And today you've got 9 hours of all types of learning and education and all types of experiences out there. The second if in life. Life is worthwhile, folks, if you try. That means you've got to take what you've learned and you've got to see if you can try it on your own. You know, it's like learning how to ride a bike and taking those training wheels off. You know, you can do it, as Nike likes to say. Just do it, folks. So that's the second if in life. That third if in life, folks, life is worthwhile if you stay. What do I mean by that? You've got to learn to stay, folks. Now, you don't have to stay forever, just until you see it through. Oftentimes, it's just until you see the trade through. You want to make sure that you've got stops in place. You've got a strategy before it is that you enter a trade. You want to go ahead and just see it through. You know, when you've got all that in place, you can go start looking for new treasures out there. What you don't want to do is just simply build foundations. Can you imagine being a construction, maybe an engineer, maybe an architect, maybe, you know, and you're just building foundations and never building the house? How worthwhile would that be? You want to make sure that you build that entire house, folks. And the fourth and final if, life is worthwhile, folks, if what? If you care. Caring, that is the most unique, most vital, most powerful, all-encompassing human experience that each of us have out there. If you care at all, you'll get some results, no question about it. But if you care enough, folks, you will get what? You'll get extraordinary results. So, folks, to lead a life worth living, you've got to learn, you've got to try, you've got to stay, and you've got to care, folks. That's why we've built, as Tom likes to say, the Hotel California right here in downtown Clearwater, because once you check in, folks, you never check out. At TFNN, we absolutely care. So let's go take a look at these markets out here. Let's see what they're doing. In the pre-market, you've got the markets trading down. Dow trading off about 58 points right now. ES Mini down about 5. NASDAQ off about 5.5. Russell 2000. Looks like the Russell 2000 and Dow leading the charge here. Right now this morning, you've got the Russell 2000 down 3.5. But it's really all about the king. This is the one chart we could spend just simply an hour talking about just this one chart. We won't, but I pointed this out yesterday because it was happening while we were on the air. I don't recall if it was the 9 to 10 or the 10 to 11 o'clock session that I was doing yesterday. But what we had unfold, and these patterns, folks, they're just simply hard to find. Of all the patterns, I can find AB equals CDs all over the place. You just simply put up a intraday chart, and you'll see them everywhere. And you'll see them on daily charts and weekly charts as well. But you can find Gartley sell, Gartley buy, butterfly patterns. You can find those on all kinds of charts. What's difficult to find, folks, though, is a 3-drive pattern. A 3-drive to a top, a 3-drive to a bottom pattern. And this is really all about currency out there. You may not trade currency. You don't need to trade currency. But, folks, if you just simply took a look and you decided to grow, you decided to learn, you decided to understand about Fibonacci expansion or contraction, ABCD patterns, sacred geometry, folks, and if you decide to learn that, you can trade any chart. It doesn't really matter what it is that we're looking at. What you know by looking at this chart, if you're watching us on TigerTV, and if you're not and you're listening on the radio, that's really cool. We appreciate that. You can always catch an archive of this show on Channel 9. And you certainly want to do that if you haven't seen this chart out here. Also, make sure that you, on your mobile device, you just simply bookmark tfnn.mobi. That way, you've got us a full 24 hours a day, and certainly the 9 hours while we're broadcasting live out here. And what you're looking at a 3 drive to a bottom pattern. Now, what you're looking for, and the reason why these patterns are so hard to come by, folks, is because you can't force them. If you force them, it just doesn't exist. I've watched people try to force them, and you just simply don't do it. You let the pattern unfold, and when they unfold, folks, they're just beautiful. They're right in front of your eyes here. And those 3 drives, again, we're taking a look at here on the U.S. dollar index. The first drive started off of the low that was formed on July 19th out at 82.80. Then you had a expansion. You had the U.S. dollar index move up into that July 24th high, 84.25 out there. Makes its next drive down. That next drive down is July 27th when it moves down to 82.40. That was a 1.272 expansion of swing points. When it comes to expansions, primarily what you're looking for is 1.272 and 1.618. We can talk about the other expansions that you need to be aware of because they exist out there. But in this case here, you made a 1.272 expansion. What does the U.S. dollar index do? It retraces. Retraces to where? Retraces to that 0.618. A normal retracement. It does that on the day of August the 2nd out there. Gets up to a high of 83.61. Then what does it do? Yesterday and really the day before, it makes that third drive down. That third drive down when it made a low yesterday of 82.07. What do you see there, folks? You see another 1.272 expansion of swing points. And where is that coming together? Now, you only want to really pay attention to a chart like this if you're interested in leading indicators. If you're interested in lagging indicators, then all you've got to do is just simply pay attention to moving averages and so forth. But if you're looking you want to be on the cutting edge, you want to know when there's a possibility of a market turn out there, then what you want to do is you want to understand candle patterns and you want to understand expansions because you can draw these patterns in advance. You could have drawn this 3 drive to a bottom pattern in advance. Now, what you did here as you made the low yesterday, you also made a 0.786 retracement off of that June 19th swing point when the U.S. dollar was at $81.39. What you also did, so now you've got, 2 1.272 expansions, a 3 drive, clearly a 3 drive, and you've come up to a 0.786 retracement area. And even more important, and I think even way more important, is that what you now have done is you've also come up into the 0.382 retracement off of that May 1st low. Why is that so important? Because when you have a reversal pattern like this, when you have a leading indicator reversal pattern like this, and all you've done off of May 1st is a 0.382 retracement, what does that set up, folks? That sets up this. That sets up, you could be taking a look at a really large A to B equals CD, because your A point on the U.S. dollar index is now May 1st. And your B point out here, folks, happens to be July 24th. That C point very well could be yesterday. And you want to take a look at what that expansion looks like? Let's go draw it in here. This is the larger outlook. If we go take a look at what that expansion is, we go from A to B to C out here. We'll go take a look at what that is. I haven't even done it, so I'm curious myself. Let's go take a look at that thing. That's going to take you up to 87.55 in the U.S. dollar index, folks. That's if this, and because this is a very important pattern. So whether you're long or whether you're short, all we need to do is just pay attention to this pattern. Now, this pattern here, the U.S. dollar index, nothing more than a basket of currencies. It's the euro U.S. dollar. It's the U.S. dollar yen. It's the Canadian dollar. It's the pound out there. And I believe the pound might be getting a little pounded here this morning. And we can take a look at, all of the currencies. But this pattern, this one chart, this is all that you need to pay attention to, because if you're long the market, what you want to see here is a failure. If you have a failure here, folks, what I can tell you is you will see much lower price in the U.S. dollar index. That means that the euro will continue to be bought, that the short covering rally is not over. In fact, it's probably turning from a short covering rally to folks wanting to buy the euro. I can't figure out why, but that's what it would be turning into. But this is the one pattern that you need to pay attention to. It is what you are seeing unfold here in the marketplace right now. It's why you are seeing the DAX trading down 54 points right now. It's why you see the FTSE off 25 points, and it's why you see the Nikkei up 77 points. Did you say, Steve, did I misread that? Absolutely not. Let's go take a look at the Nikkei, because the Nikkei also telling you a picture out here. Let's go look at it. We haven't looked at the Nikkei that often, but when we take a look at the Nikkei, and why I say it was up 77 points is because that's what it was. But what the Nikkei did here, folks, is the Nikkei went ahead and made let's go ahead and remove some of this stuff. Let's go ahead and take a look at the retracement from the high in the Nikkei, which was on July 5th, all the way down to the low of July 25th. And what you're going to see is the Nikkei here, folks, made it right to that 0.618 area last night. That was up at 80. Let's see here. I can tell you where it made it. It weighted up to 89.62, closed at 88.91, well off of its highs, folks. Made that 0.618 area. Looks to me like the market is now getting ready to crack. We talked about being on ice yesterday, and today's Wednesday, and on Monday, all of the ice cracks that we got as far as signals in the ETFs, in the indexes out there. Pay attention to that U.S. to King Dollar. And the King is back in town today. In fact, I believe he's in the office here right now. 877-927-6648. We'll be right back, folks.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on TigerTV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Let's go take a look at the ES Mini out here. Let's go take a look at the ES Mini 30-minute chart. When we were taking a look at it yesterday, let's take a look at some of the A, B, C, D patterns that are out there. Now, you came off of the low here at 1 o'clock in the afternoon on August the 2nd. You came off with a vengeance, a low out there, 1349.25. The A to the B leg out here, the B point was made at about 5 p.m. on August the 2nd, out at a high of 1362.50. Pullback, very, very light. Not even close to a 0.382. What does that say when you only pull back? Whereas, I remember I broke my rubber band. I got to get a new motor in here where I use my rubber band. When you back off to a 0.382 a retracement, you've got a lot of energy left. Well, this was like a pole vaulter out here. When we take a look at the ES Mini, it made a 1 to pi, which it does. And that is, when you take a look at your expansions, I talk about 1.272, 1.618, the level 2, 2.618 and 3.14. Those are really the levels that you need to be paying attention to. Well, what did the ES Mini do here? It went all the way up, and it had some good old apple pie. 1401.75 was the price projection out there. What the ES Mini actually got to yesterday at 1 p.m. was 1403.25. And when it got up to 1403.25, we'll blow this up here on the screen. What did it made? It made a shooting star. You didn't get confirmation of that following candle, but on the candle here, we're looking at a 30-minute chart coming in at 2 p.m. yesterday. You made a bearish engulfing. What did you do the following candle, folks? You closed lower. You had confirmation. Now what we've done here is really just the opposite of what we saw coming off of that low here. What I mean by that, if you take a look at the A to B leg now, your A point being that 1 p.m. time frame yesterday, 1403.25. Your B point is right down here at, let's just say, let me see if I make sure I got the right one, 1394.25. They're both the same, 1394.25 at 2100. What's that make it? 9 p.m. yesterday, last evening, down at that 1394.25. You're going to take a look at that C level. That was really just a very shallow retracement. If we go from our A to our B, we'll see that it was not even a 0.382 retracement, making a similar pattern on the way down here, folks. That's at least what we have set up right now. What does that do? Well, it takes the ES Mini down to at least just 1-to-1, and we know that it'll do more than a 1-to-1, but a 1-to-1, folks, is 1387.50. More likely 1385. That's a 1 to 1.272, but you just got to watch those different expansion levels on the way down. 1382, folks, that is where you should find some very strong support on the ES Mini out there. If we go, let's go take a look around the world here. Let's go see what they're doing over in Germany. If we take a look at Germany, you've got the DAX here trading off right now 42 points. Let's go see what that is all about, see what the DAX is trading into. Not having a huge day on the way down, but what the DAX did, folks, you talk about patterns all coming together at the same time. The DAX has made a 0.786 Gartley sell pattern. It completed that on Monday, tested that area a little bit yesterday. Right now, what the DAX is trying to do is get back inside that May 2nd swing point. It gets back inside May 2nd. The low or the high of that is 68.75. 87 is trading right now at 69.25.35. Look for the DAX to attempt to move down into that area today. If we go take a look at, let's go see some of the stocks here that are moving in the pre-market. Well, Priceline, we know Priceline is moving down, trading off right now $100, a little over $100. Closed last night at $6.79 and trading out at $5.74. When we go into the come back from the market open, we'll go certainly take a look at Priceline. You've got Ralph Lauren. That's trading down right now about $10, $9 and change. It's closed at $153.03, trading right now at $144. McDonald's, Mickey D's, they closed at $89. That's off $3, trading out at $86.76 right now. To the upside, you've got Rax Space. RAX is the ticker symbol. They're up nicely this morning in the pre-market. They closed at $49.30. They're trading out at $56.50. Express Scripts. ESRX is the ticker symbol. They closed at $56.02. They're trading out right now at $59.49. Dean Foods, DF is the ticker symbol. They're trading up as well. $12.42 is their close. They're trading out at $15.94. SodaStream, well, that's trading up, but that, folks, I actually saw my first SodaStream commercial out there. Not that I drink soda. They closed at $41.25. They're trading out right now at $44.48. 877-927-6648. Dow futures off about 57 points right now. King dollar up 26. Gold trading up $3 at $16.16. Silver out at $27.97. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. You got the Dow trading down 44 points. S&P's off 5, Composite off 13. Small caps lead the charge on the way down 3 points. Speaking of small caps, let's go to Lou in Nashua, who wants to talk about the IWM. Lou, thanks for calling. Thanks for holding.
Yeah, thinking of doing a short.
And then go ahead and fire away.
Okay.
All right. Anything else I can do for you?
Yeah, ABX.
ABX. Okay, let's go take a look at ABX out here. Let's see here. Charts. ABX. Are you in this? Looking to get in this? Looking to get out? Tell me what you're doing.
Looking to get in.
Okay. So if we take a look at ABX out here, I believe that this was the stock that Larry had called on. It making a, I'm just trying to find the pattern out here. He was probably taking a look at this AB equals CD pattern. Now, what I would do here is this had a real high volume low down at July 26th. Looks like it was a butterfly pattern out here that was created. We'd start with our X point out on May 16th. I'll just simply draw that in on the screen for folks to take a look at. So there was our butterfly pattern that this thing set up. What I would do here, Lou, is right now what ABX is doing, it's taking on the swing point from July 25th. That's where it last broke down. The high there is 34.47. It's trading at 34.38 right now. I'd let this thing back off, and I'd let it back off probably to the at least the high of 33.06 from July 26th out there. So that's what I would do at this stage.
What was the price I'm looking for?
You're looking at the swing point of July 26th. That swing point high is 33.06. The swing point low is 31. You know, if this pulls back, what it's doing right now, it's coming up against an area here of supply and the area of resistance. And if it gets above 34.47, closes back below it on less than 9 million shares, it ought to at least pull back and test that July 26th area. If you get it close inside 33.06, then what you want to do is you want to have even more patience, because this could go all the way back down to the bottom, have nothing wrong with it at $31, and test that on lighter volume. So that's really your parameters that you need to look at.
Great.
Okay?
Thank you.
You bet. Thanks for calling. And again, folks, 877-927-6648. Let's go take a look at some of these stocks that are popping and dropping, and we got to start off with Priceline. Now, I remember filling in for Tom the very first day that Priceline cracked, the very first day that we saw institutional selling, and that, folks, was, it was really a couple of days out here that I recall, but it was, if we go take a look at May 10th, Priceline moving down with institutional selling extraordinaire out there. That selling was 3.1 million shares out there. And what you've got here, the danger is that what happened, if you take a look at that specific day out here on Priceline, what you're going to see is that is a huge supply line. All Priceline did yesterday, as it moved back up on July 30th, came right into that supply line, came back into the C point. Most certainly, we're taking a look at A to B equals CD down. That C point is on July 3rd. That C point had 690,000 shares, and as Priceline moved up into it on July 27th, did it with 2.4 million shares. But that 2.4 million shares, folks, what it was really going against was that downdraft that had 3.1 million shares. So it just simply was working that off. Now what you've done, and the problem here, the biggest problem in a stock like Priceline is that when you take a look at the B point here, that B point doesn't have any volume, not compared to when you saw institutional selling. And when you see that, you want to make sure that you're likely looking to get out of those stocks, not stay in on those stocks, especially if you were already in on them. Because taking out this B point, which is what Priceline is doing this morning, that B point is June 4th. That B point has 1 million shares. The low of that, 603.49. Priceline right now trading out at 585, already 1.2 million shares. So you see, it already took that volume out in what period of time here? In 8 minutes, less than 8 minutes. That's what Priceline did. Where's Priceline going to travel to now? Because you're going to have institutional selling that's going to continue on this. You're going to see it at least get to 523. You can see it's already below the area where it last really broke out. Its breakout was on February the 27th, had a nice gap up. On February 27th, it only did 1.8 million shares out there. You've got a wide gap, meaning it gaps up the following day, February 28th. So you've got wide price spread, not on that day, but you've got to consider taking a look at that gap as wide price spread as well. Does it with 2.7 million shares. That was the last time that you had any real sign of strength here in Priceline. Now you're trading below that area. I suspect that what you'll see is at least 477.25. If we go take a look at the in the next sign of any kind of support out here, it's going to be at November 8th. That's going to be up at 553. But I suspect you at least get to the low of that and complete at least a 1-to-1 A to B equals CD. If we do start taking a look at the weekly chart out here, and this has had just simply an extraordinary run, folks. You're talking about going in March of 09 in the 55-ish level all the way up to 780. 774.96. That's a heck of a run. That's a run. I think that run is probably better than Apple's run, isn't it? In fact, I know it's better than Apple's run out there. So, that is on Priceline. And if we take a look at Priceline and you see where you last got volume out here, which is dangerous, August 6th, 2010. Oof. And that's, folks, that's a price point of $298. In fact, if you just simply go from the where Priceline started its run all the way up to the high, so you're in that 50-ish range, you're at 46.95, what you're going to see is just a normal back off. Just a normal back off those high brings you to 496. And 325, that's just sweet old 618 out there. So be careful if you are in Priceline. Let's go take a look at RAX out there. RAX is the ticker symbol. That is trading up nicely this morning. That's up 14%. RAX, let's go see what RAX is taking on, gapping up. Let's take a look at the volume so far today. So what is RAX doing? RAX is coming into where you had major institutional selling. That institutional selling, folks, on May the 8th, when it gaps down, does it with 12 million shares. The prior session was 4.5. Let's see, so far this morning you've got nice volume in it, 1.1 million shares in the first 11 minutes of the trading session. But this stock is broken out here. So maybe this is going to set up a trading range. It'd be a heck of a trading range because you'd be in the $58 range all the way down into the 39s or so, 43, 40 bucks, something like that. Why do I say that? Look at how this stock is traded. This stock gaps up on February 14th. That was your real sign of, most recent sign of strength out there. Moves up from a price on the when it does that gap up from a low of about $48 all the way up to the high that it made with a doji candle right up there at $60.55. So it makes that high, and then what do? A few trading sessions later, gap down on 12 million shares. So you gap up on 11, you gap down on 12, moves a little bit lower, and then what are you doing today? You're gapping back up. So this thing here really setting up a trading range out there, and that next trading range is going to, as soon as it gets into the May 7th area, maybe it's the high, 58.91. At 58.91, you might want to take a look at selling RAX space. Yes, folks, I said selling RAX space because it looks like this thing here is setting up a trading range. Let's go take a look at Dean Foods. Dean Foods having a very healthy day out out there. Dean Foods trading up 36%. Let's see, is there some news behind this? Is this because, when you consider food prices out there and the shortage in corn and everything else, Q2 net income, $56.1 million versus $50 million out there. So, not too bad. $3.1 billion in revenue versus 3.3. So they must have given some guidance coming out of their shoes here. Is there anything else? To lead IPO for Dean Foods White Wave unit. Okay, so they must be spinning off a unit out here. But let's go take a look at that chart. So let's go take a look at DF is the ticker symbol out here, DF. And you can see this thing gapping up nicely today, coming back towards the most recent high out there. On Dean Foods, what you're looking at is the high of July 3rd. Did 2.3 million shares. The low of that session, July 3rd, is 1678. You're traded at 1679, so you're inside there. And what you have done already is 6.4 million shares. So Dean Foods here having a very healthy day. Let's pull this back a little bit further, though. Let's go see what it's really doing. We'll put it on a weekly chart out here. This chart doesn't look very good, folks, does it? Oh, my goodness. So that's why you want to go ahead and just simply, whatever time frame it is that you trade on, folks, make sure you always go up at least one level. You'll get a little bit better picture of it. Dean Foods gapping down substantially here, May 7th, 2010. All Dean Foods is doing right now is going back into that area. That was a large supply line, 112 million shares on that week. I don't think you're going to even come close to that here today. That's on Dean Foods. Let's go to D in Orlando. D, thanks for calling. Thanks for holding.
Hey, thanks for taking the call. I'm short JBHT.
Okay. So
I'd like you to give me a read on that chart.
Absolutely. I'll be happy to. So D is short JB Hunt Transportation Services, folks. They're subsidiaries that provide transportation delivery services in the U.S., Canada, and in Mexico. So let's go take a look at this chart for D here, JBHT, and tell me, where you're in, what your strategy is, and how I can help you.
Well, I bought the September 55 puts.
Okay, all right.
And I'm about flat in the position right now.
Okay. So if we take a look at JB Hunt, a gap down here, did that on July 17th. It's trading in that swing point area here right now. You've got September, so you got a little bit of time here. And what this thing is doing, it's just really, let me just try pulling this back here on a weekly basis too. So let's start with a little bit larger look on this chart. It certainly has some institutional selling here. It's the first sign of really institutional selling. It did that a few weeks ago, July 20th. The problem is that, it's just churning around sideways, building some cause here. And so let's go to a real intraday chart here. Now let's just simply go down and see what this thing might be doing volume-wise or pattern-wise on a 30-minute chart here for you. Okay, so, right now what you're dealing with is you'd certainly love to see it get below that open. Do you use a charting service at all when you're taking?
Yeah,
you are, okay.
Yes, I do.
Okay,
yeah.
So I'd be looking at that open from July 17th. And, what you want to see is it get below that 54.38 area. You're at 54.86, a gap down a little bit this morning. But you want to see it get below that area, 54.38. And if it gets below there, then what you can do is you'll probably be a little bit in the money. You might, if you've got more than one contract, you might start taking a little bit of bread off the table here.
Okay.
Yeah, but, because this thing long-term wants to trade lower. But so far, I'm just not seeing anything out here to give you a lot of real hope here from a timing standpoint. I'm going to go down even further into a 10-minute chart, see what we have here. So even on that 10-minute chart, what is holding it in place here right now happens to be the 4 p.m. close on August 2nd. And that high is 54.54. So, it just, if you get into that area there, 54.54, you might want to take a look at some bread off the table. Or because there's not a clear indication if you're flat. There's nothing like getting out of an options trade when you're flat.
Yeah, that's what I was going to say. I saw more there than what you're seeing. So, that's no problem. But I'll even take a small loss there and just go on to the next trade.
Yeah. So this thing is just it just may take a little while to work sideways. But
okay.
So that's at least what I see, and that is on JBHT, folks. Anything else I can do for you, D?
Yeah, I also ask about Texas Instruments, TXN.
Okay, so let's go take a look at Texas Instruments. TXN is the ticker symbol. Are you in this trade, looking to get in this trade, trying to short this trade? What do you tell me? Tell me what you're doing.
Well, it looked like it broke out yesterday, had good volume. I was just going to try to grab it on a pullback and get your view on where you might see it going and what you think of the chart overall.
Okay. So if we take a look at Texas Instruments here, I don't know what the heck happened here on this day, April 20th, 2012. I don't know. It didn't exactly have wide price spread, but there is a seller out there. So on April 20th, so you might want to do just first a little bit of research, try to figure out what the heck happened there. I'm going to put this on a weekly chart here now. We take a look at Texas Instruments. This thing has been consolidating here ever since October of 2009. It's been consolidating in a range of $24 all the way up into the $36 level. You're trading at $29 here right now. Let me see here. Refresh. Want to make sure I've got all the right data in here. Hey, do me a favor, D. We're going into break. If you stay tuned, we'll go back and we'll take a look at Texas Instruments. Folks, 877-927-6648. Dow trading off 26 points right now. S&P's off 3. Let's see what the King is doing. King dollar up 26 ticks. We'll be right back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
Welcome back, folks. Let's go back to Dee in Orlando. We are taking a look at Texas Instruments. So, Dee, I've taken a look at this chart here and just really trying to come up with some kind of trading plan for you. You're looking to possibly go along this. Now, when I put Texas Instruments on a monthly chart out here, this thing actually gave a long-term bearish signal back in April of 2012, several months ago. And what I mean by that, folks, is if you're watching on Tiger TV, you're looking at the monthly chart out here. And on the monthly chart, I'm using a lagging indicator to be able to identify that. But when you have the 50-day exponential moving average cross through the 200-day, that is giving you a signal that this thing is in bearish mode. So on the longer-term picture, that's where Texas Instruments is trading at right now. It looks to me like resistance on Texas Instruments. Let me see where that is. Let me put this on the chart here. You're going to find, just simply from that standpoint, you probably start to see some selling pressure come in when it gets up into the 29.76 level. You're 29.17 right now. That's on the longer-term basis. I know that you're looking at it more for like a daily trade or something like that, and I would just I would wait for it to come all the way back down to its lows. That's the best I can identify out of this chart here, is let it come into the $26 area and just watch the volume. If you got volume, coming in there with more than 8 or 9 million shares, then stay away.
Very good. I appreciate it. Thanks so much.
My pleasure. Thanks for calling. Let's go to you bet. Let's go to Gary in Tampa. Gary, thanks for holding. Thanks for calling.
How you doing, Steve?
I'm doing excellent. Thanks for asking. You wanted to look at fire. Fire. Tell me what you're. Tell you play with fire. You play with fire, Gary?
I want to fire away at a short.
You do? Okay, all right. So let's go take a look at fire for Gary here. It's trading out right now at 47.28. Had a nice move down here on August the 1st, volume-wise. So what this thing here still has, believe it or not, it's still, the institutions are in here supporting that. And where I'm going with that, Gary, is that February 22nd date. That February 22nd, fire gaps up with 5.6 million shares. And when it moved down, and it did move down here on August the 1st, it did it with 4.7 million shares. Really couldn't bust through that area. So if you're going to take a shot at it, you're better bet. Let me put this on an intraday real quick. Let me see what I can find. But here's my point. Right now, this thing hasn't proven itself that it's going to go ahead and bust 41.15. Okay. So
yeah, I was just trying to run it down maybe to that high-powered low right there.
Yeah,
that high-volume low.
Got it. Okay, so you're going to have some real quick fingers here. What I would do is I would let it prove itself to you and get up to the top of that 48.40. You're at 47.47 right now. Let it get up over it and close back below it, and then you could fire away at fire. But remember this, Gary. you are playing with fire out there.
Thanks a lot. All right, have a good day.
All right, you too. And folks, stay tuned. Tom and I will be up next. The King is back in the building. I can feel the energy here right now. Then we go up, as we do on Wednesdays, up to Basil Chapman in Newton, Mass. Larry Pesavento out in Tucson from 12 to 1. Darryl Martin 1 to 2. Diagnostic Trading Hour. He's our newest addition to the team here at TFNN. Then to the David White Show all the way back here from 2 to 3. 3 to 4 is Ken DeShreve, and then Tom O'Brien from 4 to 6, folks. So stay tuned, and remember this, folks, to lead a life worth living, all you've got to do is 4 things. You've got to learn, you've got to try, you've got to stay, and you've got to care. And, folks, we absolutely do care about you. Thanks so much for staying tuned. Stay with us. So we'll be right back. If you're off to start your day, I will see you tomorrow morning right around 9 o'clock. Take care, folks.